Okay, we are still in chapter number 3. We are on the second problem. This is the Warshawski company. And we happen to have a trial balance, or better known as an unadjusted trial balance for you. And you'll notice here in your handout that the debits, $68,700, equal the credits, $68,700. And we have 6 items in the additional information right below. And those 6 items are going to require some adjusting journal entries to get the accounts to their proper balance so we can prepare financial statements. Now, in number 1, it says services provided but not yet billed, $6,200. Well, that's an unrecorded revenue. And so you can see right here, I debit accounts receivable and I credit the service revenue, $6,200. And then, of course, I would post it to the ledger account. Item 2. Insurance that expired during the period, $4,500. Well, that means that I have insurance expense, $4,500. That's what's expired. And prepaid insurance is going to go down by $4,500. In item 3, it says depreciation expense on equipment is $1,900. So I'm going to debit the depreciation expense, $1,900. And remember, we have this account called accumulated, and I did abbreviate depreciation, and that is a contra asset. Again, I can't stress enough that you know that that's a contra asset, and I credited that for $1,900. In the 4th item, unearned service revenues that have been earned during the period of $900. Well, let's look up above in the trial balance, and I see there unearned service revenues, and I look across. It says that people have paid me $1,200 that I've yet to earn. But during this period, this additional information says I've earned $1,200 of that. So I have to decrease that liability. So I debit unearned service revenue for $900, and I say I've recognized revenue of $900. So I decrease my liability and increase my revenue by $900. The 5th item says that I have some accrued interest, $800. So I debit the expense, interest expense, and I abbreviated that. And interest payable, $800 is credited. And lastly, I have some salaries that I've incurred but not yet paid. Now, if you get paid on a Friday and your employer's year end is, let's say, on a Wednesday, they don't pay you on Wednesday. They pay you on Friday like they normally do. But on their books, they have to book out that for the year that you're looking at here, in this particular case, 19 whatever XX, you've actually worked for them and they've incurred a salaries. So we're going to debit salaries expense and credit salaries payable for $1,400. What would you do next? Well, the next thing is you would post all these to the ledger accounts and then again prepare an adjusted trial balance. Now we won't be doing that, but that's what you could do if you so wished. All right, we're going to go on. We actually have 4 questions. Now, I'm not, the next question, and we'll just kind of talk about this briefly, you can look on your notes. The Finney Cleaning Company, number 3 here. And we're not going to do this one as a live presentation, but I would ask that you do that, and then I will provide on the Angel website the answer to this one. So I want you to do that on your own, and do that. And then you'll notice there is a 4th one there. Now the 4th question, it's the ABC company. And on this particular one, it's a part 1 and part 2 type of question. What you have to do is part 1 is actually going and making transactional entries, just like we did in chapter number 2. And then you'll have to put some T accounts together, and you'll have to post all the information to the T accounts. And then part 2 here, in problem number 4, is you have 6 adjustments. And you will have to adjust the accounts that you have. And then you will have to post that to the ledger accounts. And then you will have to prepare an adjusted trial balance. And that happens to be your quiz that is due this Saturday at 5 p.m. And so this is the quiz for this particular chapter. And I will give you a little bit more information on the Angel website for this. All right, so that happens to be chapter number 3, and now we're going to go into, right after this, chapter number 4.